Hey, hello investors, welcome to the channel. For today's video, we're going to be doing a deep dive into Leap's option. Now, if you're looking for that one option strategy that you can get into your portfolio and just do nothing about it, and it appreciates in value over time, then this is definitely the video for you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be doing a deep dive on one of my favorite option strategies, and that's going to be the LEAPS option strategy. Now, LEAP stands for Long-Term Equity Anticipation Securities. Yes, it is a mouthful. Hence, we just stick to LEAPS option. Now, with the leaps option, here's a fun fact for you. If you have one, it's going to be a leaps option. If you have two, it's still going to be a leaps option. It does not change. Now, before we go ahead and get deeper into this video, I would like you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. And favor number two, always make sure you have an exit strategy before entering any option trade. For today's video, we're going to be using none other than the Russell 2000. If you're not familiar with the Russell 2000, then this is an ETF that actually mimics the small cap stocks, as you can see to the bottom here. So this is an ETF. At the end of the video, I'm going to show you the perfect stocks in order for you to go ahead and use the leaps option that make sure that you always keep winning. So let's go ahead and get down and dirty with options. Now we're going to go to the bottom that says trade IWM option in order for us to open up the option chain. Now, here we are on the option chain. And for those of you that are really new to option trading, really quick, this is going to be the option chain down here. So this entire area down here is known as the option chain. The purpose of the option chain is to give us enough information in order for us to make an informed decision before getting into any option contract. Now, a LEAPS option, like I mentioned, stands for Long-Term Equity Anticipation Security. The first part of it is long-term. So that being said, we're going to go to buy, we're going to go to call, and now we're going to choose our expiration date. Now, before we choose the expiration date, here's another fun fact for you. When trading options, every single option trader, whether you're a buyer of an option or you're a seller of the option, we always get the strike price correct. Every single one. The reason why most of us fail is that we get the expiration date incorrect. If you guys want to go back and look at your option history, just go ahead and check out the strike prices that you chose. Sooner or later, it's going to hit that strike price you chose, or it already hit that strike price, but the option had already expired. So that is where LEAPS option come into play. With using a LEAPS option, it gives you a much further expiration date that gives you a higher probability of the trade going in your favor. So let's go ahead and choose our expiration date. Our expiration date we're going to be going with today is going to be March 20th, 2026. Now, in order for it to be a LEAPS option, it must be a year out or more. LEAPS usually last between 1 year and 3 years intervals. So we're going to go with the March 20th, 2026, which gives us 374 days to expiration. Now, in order for your LEAPS option to be the most effective, it is highly advisable that you choose your strike price below the current share price. As you can see, the current share price right now is 201.59. Now, can you purchase your LEAPS option above your share price? Absolutely. Is it advisable? Not really. So let's go ahead and choose our strike price below the current share price. Now we're going to be going with the price of 190 right here. As you can see to the top here, it says strike price. Now with the 190 strike price, because we're going to be buying a call, we're going to have to pay. The amount we're going to have to pay is going to be $29 per share. Now, that's going to be $29 per share, but when you translate that into the real world, that's going to be $2,900. And that's because each option contract contains 100 shares. Now, before you go ahead and actually purchase a LEAPS option, you always need to do a bit additional research. And for that, we're going to go ahead and click into the strike price. And that's going to open up a secondary part of the option chain known as the Greeks. So this is the Greeks down here. So with this strike price of 190, it shows you here that you have a delta of 0.70. Delta is a very important criteria in order for a leaps option to materialize in your favor. Now, how does the delta help out? The delta is going to give you an estimate of the change in the entire option contract with any movement in the share price of $1 upwards or downwards. Now, let me break that down for you in English. If the share price here of 201 went up by $1 and is now 202, then this entire option contract is now going to be worth $29 plus zero point 0.7 delta. So this entire contract is now going to be worth 29.7. Of course, if everything else remains equal. Now, vice versa. If the share price here goes down by 1 and is now $200, then this entire option contract here is now going to be worth $28.30. So that's going to be the $29 minus the 0.7 delta. Good. Another key factor to always consider before getting into a leaps option is going to be your implied volatility. Now, as a rule of thumb, any implied volatility from 1% to 50% is very low risk. And what you want for your leaps option is a very low implied volatility. That just means that the riskiness of the stock is very low and the stock is not going to fluctuate as much as some other stocks. Now, an implied volatility of 50% to 100% is like the midway point. You can still choose a leaps option right there, but it's going to be more volatile within the interim. Now, any implied volatility of 100% and higher is extremely high, and that increases the risk of your leaps option. Now, the beautiful thing about purchasing a leaps option is because you give yourself so much time, you need not worry about a day-to-day fluctuation in the share price because, once again, you have lots of time. Now, with this leaps option, let's go ahead and click into it. This is known as a long call, or like I said, a leaps option. Now, why would you want to buy a leaps option? What a leaps option does is that the leaps option is the equivalent of a buy and hold strategy. So the leaps option is a bullish option strategy, meaning if you were to decide to purchase a leaps option, that means you're of the mindset that the stock price of whatever leaps you're going to buy, you believe that the share price is going to keep going up over time. Now, because you give yourself about a year or more, the odds of that working out in your favor is extremely, extremely high. And that's what makes leaps options such powerful to have in your portfolio. Now, with a stock like IWM, it has given returns of more than 10% on an annual basis. Now, with a leaps option in your portfolio on IWM, this is going to appreciate, the share price is going to appreciate about 10% over the next year. Like I said, the leaps option is more like a buy and hold strategy. So this is one of those option strategies that's almost completely passive. The only effort you're going to put into it is to do your own due diligence before purchasing the leaps option. Once you've done that, you simply set it and you forget it. Now, why would anyone want to pick up a leaps option? Well, I'll tell you right now. The whole purpose of using a leaps option is that the leaps option allows you to control 100 shares of the stock. It actually mimics a certain amount of shares in your portfolio. So once again, we're going to go back to the delta. So if you were to pick up this leaps option right now at $190, your delta was 0.70 right here. So this is equivalent to you owning 70 shares, basically. Now, because the 0.70 here mimics you owning 70 shares of the stock, every time the share price here goes up by $1, your overall portfolio value is going to go up by $70. Remember, we are dealing with options here. So once again, each option contract controls 100 shares. So let's say within a year period, IWM goes up and it goes up to $50. Now your entire portfolio is going to go up by $50 multiplied by 70. And that's going to give you a stock appreciation, or what I like to call on this channel, an investment gain of $3,500. So by you purchasing this leaps option at a very long expiration date, more than a year out, and you have it in your portfolio, you need to do nothing. Whenever the share price were to appreciate, then your entire portfolio value goes up by the amount that the share price goes over. If the share price, let's say, goes up to $50 and this stock has gone to $240, so it definitely is possible. If that happens, then you're going to gain $3,500 in your portfolio extremely passively. So, this option strategy is also perfect if you're trading with a small account. If you were to buy IWM right now, it will cost you about $201 per share. Now, that's going to be a pretty penny if you're trading with a small account. If you were to leverage the use of a LEAPS option, you're now going to be able to control 100 shares for just $2,900. So you're still going to get the same stock appreciation. That's going to be highly leveraged now to make you grow your accounts portfolio exponentially. So let me go over it real quick again. The LEAPS option strategy is a perfect option strategy to own in your portfolio, especially if you're trading with a small account. One of the main reasons for someone to go ahead and purchase a LEAPS option is because it allows them to control 100 shares of the stock and it gives them enough time in order for the share price to appreciate. Once again, the LEAPS option is a bullish option strategy. Once you purchase a LEAPS option and you have it in your portfolio, you don't need to do anything else. You just set it and you forget it. As time goes along, the stock market usually appreciates in value. A stock like IWM usually gives you a 10% or more increase annually, so expect this option to go up by a minimum of 10%. Now, what happens close to expiration date? Well, you do have two options, no pun intended. Make sure 3 months before the expiration date, you could either go ahead and close out this option in order for it to lock in your gains. The other option you have is that if you think in your mind you have not realized enough gains, then feel free to go ahead and roll this option into another one. Now, rolling simply means that you're going to go ahead and close out your current option contract while simultaneously opening another one. And what you could do once you do that is that you go ahead and just sit on the LEAPS option and watch it appreciate in value once again. Now, for those of you guys that stayed to the end of the video, here's your bonus. If you're considering the use of LEAPS option in your portfolio, here are 3 ETFs that can be used. If you're going to use the LEAPS option only by itself, then strongly consider this stock right here, IWM. Number 2 is going to be the SPIDER ETF, ticker SPY. Number 3 is going to be triple Q, QQQ. So the reason why these ETFs are perfect for LEAPS option is because they're all ETFs. Number 1, they have a certain variety of stocks in their overall portfolio, which makes it a bit safer than using an individual stock. Now, since you guys stayed to the end of the video, go ahead, like the channel, subscribe for more. And most importantly, if there's anyone out there trying to grow a small portfolio, especially using an option strategy like the LEAPS option strategy, then go ahead and share this video with them. And if you have any questions concerning options or the use of LEAPS option, then let me know in the comments below. And until the next video, keep pushing your investments.